Hi. I had a discussion with my 9-year-old son this morning who had to hold a presentation at his school, which is worse because I said I also have to hold a presentation, and after a while we agreed that I'm actually in the better position because I don't have to speak about the Romans, I can speak about the cool stuff. So unless any one of you wants to hear something about the Romans, I would start with the cool stuff now. So today is a historic day. Earlier, the British Prime Minister Theresa May has triggered Article 50, as we have heard. And as a leading UK-based bank, Barclays and Barclaycard are immediately affected by this decision. However, not only the political and regulatory world is changing, also the industry, and we have many changes impacting us. Therefore, I'm delighted to stand in here for Carsten Höttgemeier today to speak about the role technology is playing in the development and the transformation of the payment industry. First of all, let me introduce you to Barclaycard. Barclaycard was founded in 1966. It was the first issuer of credit cards in Europe, and it has been a market leader for cards in the UK. 1 out of 3 payments are going by Barclaycard, and we have strong businesses equally in the US and in Germany. We have a leading market position for revolving credit cards in Germany and the fastest growing loans business. But we are not only focused on credit cards, Barclaycard is also a leader in new payment forms, so it's not true that the banks don't innovate. Actually, it's quite the contrary. Barclaycard has been leading for a while in mobile payments and BPay and wearables, for example, and we've recently acquired the Logic Group, which is one of those innovators we tend to use to provide the customers with the best service. And also Barclays is often supporting accelerators just to give the new startups and the new technologies proper advice and a startup in the business. So why is the payment landscape changing? The question is, what's the driver behind this? Well, there are 2 things. First of all, we are all consumers ourselves. And what do we want as consumers? We want better, easier, faster payment solutions across all industries. And the second driver is, of course, technology. Technology allows us now to create new solutions to meet those needs in much, much faster than ever before. And the world is innovating. The world is innovating, and payments is at the sharp end of it. Take a look at these stats. Last year alone, 10 new payment startups were founded every week. 60% of venture capital money in fintech globally was invested in payment in recent years. Today, over 200 payment types are used globally. And in the UK and the US, mobile payments are growing 31% from 2015 compared to 2016. In other words, we are all going through a period of rapid change in payment. But what are the trends? What are the key trends we see? Generally speaking, there are 5 key trends that we think are most significant and will have the most impact for payments industry in the future. Let me talk you through all of them. The first trend is invisible payment. This is actually a situation where the customer doesn't consciously choose a payment method anymore, where he doesn't decide to use this card or that card or this provider or that provider. One good example is Amazon. There you have your card somewhere, and then you use the one-click checkout, and you just pay. You don't even think about anymore which card did I put there originally. Personally, I only remember which card I used because I get a statement of a bank I usually never use anymore, just because the card is there. But then there are also other companies who have brought that one step further. For example, Uber. There you order the cab, you get in, you get out, and in the end, of course, Uber is paid. But you don't even think about that anymore because you just use the app, and you can't remember anymore which card you put in there or which other payment device. And this is also one other example would be Amazon Go, where Amazon wants to enable shopping even without using a specific card. And customers like these experiences because they're easy and convenient, and they don't even want to think about payment anymore. The second trend is the proliferation of data. We are all becoming more digital, and this is driving a massive increase in the volume of data. 90% of the world's data was created in the last 2 years. Or another number, in 2013, the total amount of data in the world was 4.4 zettabytes. A zettabyte is a trillion gigabyte. By 2020, there will be 44 zettabytes, 10 times as much. This presents huge challenges and opportunities around how the data is stored, protected, and used. Now, what the key is here is the ability to make sense of that amount of data. We need new tools such as machine learning and artificial intelligence, but the price is a great benefit for the customers. We are already starting to use machine learning to identify customers earlier who might be getting into financial difficulties. This means we can help them earlier. It's better for them and for us as a responsible lender. Another trend is cyber threats and new forms of identity. The third trend is around cyber threats and identity. We are seeing an upsurge in cyber attacks, and payments is no exception. Our customers want to be confident that they will not be the victim of fraud. Trust and security have become increasingly important for them. And especially for me, as I'm speaking here as head of legal for the German business, I can tell you there are two things where I have zero risk appetite and no sense of humor. One is tax, and the other one is data privacy, because both will get us on the 8 o'clock news, and the reputational harm behind that is much, much bigger than any fines can ever be. So it is crucial for us and for everybody who wants to use new payment methods to protect the integrity of the customer data, because as a customer, I do not want my data compromised, and as a company, I do not want data compromises because it will harm my business. Barclays is heavily investing in cybersecurity. So, for example, we have just hired Troels Oerting, who used to be Associate Director at Europol and the head of the European Cybercrime Center. However, there's an upside to these trends as well. As we have just heard from the colleague from MasterCard, we are investing in new methods of identifying the customers, for example, via biometrics like face recognition, fingerprint authentication, and so on. So the more we can do to provide secure identities or secure authentication methods, the better it will be for us and for the customers. The next trend is what we see a requirement for Omni-Channel. Customers do not want to use one channel only. They want to be able to use all the channels all of the time. They want to buy something online, they want to buy something on the shop, they want to buy something via the phone, just as how it is convenient for them. And they also want to order something online and pick it up in store, like the click and collect. The UK retailer Argos has now over 50% of its sales fulfilled in this way, that the customers order online and then they come and collect it. So Barclaycard is heavily investing in providing our retailers with a comprehensive solution to all of those different channels, because we cannot just focus on one of them. The next trend are new business models, as we have heard. Traditionally, payments were only provided by full-service banks. Now the market has opened up and we see a wide range of players in payments across Europe. These range from small fintech startups to big technology companies to new entrants such as the Chinese provider Alibaba. We view this competition as positive if properly supervised. It all opens up opportunities to collaborate and develop great solutions for customers. 99% of the startups would have a desire to work with existing corporations, and 82% of the corporations view interactions with startups as important. This collaboration can be a real win-win if it's done in the right way and with the right intent. And to be very clear, we do not think that competition is in any way harmful. If we have a competition, this will always help us be smarter, be faster, develop more, to give our customers better ways to interact with us and better protection. So in no way I would say that we see this competition as being negative. So what do we need from the European decision makers? First of all, and that's very close to my heart, innovation needs legal certainty. When the business comes to me and asks me what should we do or what can we do, I want to be able to tell them what they can do. So we would welcome a quick finalization of the PSD2 level measures, one that acknowledges the use of transaction risk analysis to determine what security factors are to be applied to effectively prevent fraud in online payments. The second thing we need is safety and security. In an increasingly diversified payments landscape, it is important that all payment service providers adhere to a common data security requirements and are certified and effectively supervised to maintain trust in the system. Because what I mentioned before, if something happens, that doesn't only affect that one single transaction and it doesn't only affect that one single company, it will be on the 8 o'clock news and it will affect the trust of all consumers. And this will negatively affect not only us, but also the competitors, and that's what we don't want. We need standardization and interoperability, because that's the key to avoid fragmentation of the market and to boost innovation and competition. As we have heard before, you cannot develop standardized processes on a case-by-case basis. You need a standard that is there for everyone, so nobody has a disadvantage. We welcome efforts to develop a European framework for mobile payments, as well as development of an API standard for banking. And the last thing we need is trust. We need trust in underlying authentication measures, and data privacy is key for the support of innovation of payments. In doing so, we need to ensure data privacy standards are adhered to by all market participants. And now I'm looking forward to the panel discussion. Thank you.